Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of DXY dollar index. My name is Vic. Thanks for joining me here. So what we saw in the last week that dollar started to rise up, and that's exactly what we were expecting. If you remember, or if you watched my previous analysis from the last week, we were expecting dollar to go up, and there was a specific reason why we were looking for that. But before that, let me quickly give you an overview what dollar is actually trying to do on higher time frame. So dollar fell through all of this and it reached this demand zone, and this was also an FCP zone because if you pay attention to the current market structures to the market structure, then we had this M pattern, and because we had this M pattern right there in the demand zone, we knew that market was going to go up. It went up, created a double bottom, and now it is trying to go back up again. So that's what the market is trying to do, and I'm expecting market to reach this moving average, or ultimately, like from 95, 94, 95. It may even cross 95 as well at some point in time. But we are looking at weekly and monthly time frames, so that means it may take weeks or months, and market can change in that time as well. But for now, it is looking like it is following the plan, and it is gradually going towards that 95 to 96 area ultimately, which I've been talking about since third quarter of last year. So that's what the dollar is trying to do. So overall, on weekly and monthly time frame, we can expect dollar to continue to go higher. And so if that is the case, then you should actually favor your bull positions on dollar. However, there is a risk, which I mentioned in the previous analysis as well. And because a lot of people actually will subscribe to this channel or watch this video for the first time, that's why I'm revising. I'm repeating this. But there is a gap here. The market usually tries to come back and fill that gap at some point in time. It may not happen immediately. It may not happen this week, next week, or next month. You never know. But ultimately, at some point in time, the dollar is expected to fall down to near about 90 area or so. There is a gap around that 91. There's one gap around 90 something level as well. So be aware of that. If the market actually starts to roll down, then that can be an area to look for any kind of buying opportunity. And if you are looking for a long trade in dollar, then also you should be aware of that, because there can be a sudden move falling down to this level and then go back up. That's quite a possibility, especially when you see that the market has not been able to go beyond this particular resistance level. You see, we were expecting market to actually create a W pattern, and it has not been able to do that, because you see this level was not breached. It was breached, but it never actually tried to close beyond it. So with that, what we have right now is the market is actually kind of sideways movement. So if the market goes up, it will probably come back down, goes back up, it can probably come back down. So that is why I'm saying that unless, like we see a structure break, or like at the mid of this channel market, if it comes there, then we can also look for opportunity. But right now this is looking like consolidation, and it may continue to stay in that for weeks and months to come. So for now, what we have is that the dollar has moved upwards in the last week, and this is what we were expecting. We were able to capitalize on this particular move, and the reason behind that, if you remember the previous analysis, this was an M pattern and right on this moving average. And that's why I said, the dollar could move up. Now, if the dollar is actually going up, then that meant Euro USD, AUDUSD, GBPUSD, and in some cases, precious metals such as gold and silver were supposed to come down. And we saw those kind of movements. I did an analysis on Euro USD and other forex pairs, and obviously I cover gold as well. If you have not checked them out, then go and watch those analysis videos from the last week. All of them have been actually able to move against the dollar, because if the dollar is going in good strength, then other dollar based markets will try to show the impact of that. So let me actually quickly show you what happened on Euro USD. Fell down, and this was a very good move. We were able to capitalize on this move. We were able to take a short from FCP zone, and it fell right into this target, and it was near about it was near about 70 something, 70 pips or move. And then we also were able to capitalize on AUDSD. Essentially, they are similar, but if you want to just distribute your risk, then you could have actually opened multiple positions across these currency pairs, and that's what I personally did. In this AUD USD, we were able to capitalize here about 81 to near about 100 pips or so, and then on GBP USD, as I said, it was a little more bullish than others, so they were. Um, that so what happened actually, market started to go down on the completion of this W pattern when DXY was rising. This actually fell down, and then almost immediately GBP USD started to rise. You see, on AUD USD, it rose a little bit, not that much. On Euro USD, a little bit, but GBP USD, why it went all the way to that level? Because, as I said in the previous analysis, GBP USD in comparison is far more bullish. In this one, we were able to capitalize on this particular move, which was near about 74. That was 74, but it kept on going for 138 pips or so. So this was a very, very good week based on the dollar. And I'll cover this in gold analysis later on, but let's see what happened on gold as well, because the dollar started to move higher. Now, I always remind you of this, that the dollar and gold may not be always inversely correlated. So always watch out for that kind of degree of correlation. Euro USD and DXY are more correlated than dollar and gold. So do not trust that the gold will always follow the inverse position, inverse direction of the dollar. So let's look at the gold as well. So gold started to fall down. So it actually fell down from this particular level where it was. It was right there. And as the XY started to rise up, it almost started to fall down almost immediately because it was right there. And in my analysis, I mentioned that this was the level, this was one level, and another level was here where dollar could actually fall from. So I'll cover this in gold analysis, and go and check it out later on. Let's go back to the DXY once again and see what we have right now. So let's go to the VATA Envisage for a second and show you what actually happened. So on monthly time frame, the left one is monthly time frame and the right one is weekly time frame, and we'll do multi time frame analysis to find the opportunities. So what happened here is, remember, we were expecting dollar to actually start to rise higher, and the reason was this: what a wave could actually act as support here. The market came here, touched it, and started to go up. On at the same time, the water weekly started to fall down and it touched the water curve. They are exactly at the same place. So if you want to see, this is how it is. So if I remove this cursor here, you see on the right hand side, it's exactly at the same place, right? This one. So the market came here. What a wave on monthly, what a curve on a weekly, they both became support, and this is what I covered in the last week, and that's why the market started to go higher. So if I go to the daily time frame on here on the right hand side, the market started to go higher, and we had a very good run from here. It turned blue, and on 4 hour time frame, this is where we actually took the trade. So how could you have taken the trade using VATA and Visage? It's very, very simple. All you have to do is just look for the change in color. So the color changed from red to blue, and here change was from red to blue. And I posted this in Telegram group as well, that the market could actually go higher, and on the close of this candle we could have taken the long trade. Okay, so this was the context, because the market was going to touch water wave and water curve on monthly and weekly timeframes respectively, and we were able to take the trade on 4 hour because we knew that they were going to act as support, and that's why we were looking for a long position based on this. So this is how we capitalized on DXY. So what's next now on DXY? I have already drawn FCP zones and levels because the older ones were actually getting a little more confusing. So let me actually quickly put that. There is a gap here and there is a gap here. This is approximate location. I'll show you in a second where the gap actually is. So the market actually created this this M pattern and started to go up, and this is exactly where the water wave is and water curve was, and this moving average was. So this turned out to be very good, like confluence of several factors in there. So the market started to go higher, and now what we have is that this came to particular level here, and in this fashion, if it continues to rise, then we have a possible W pattern which can lead the price into this FCP zone. There can be an M pattern as well. So if the market starts to go down, it can come back into this FCP zone later on. So these are the possible scenarios here. Let's go to the 4-hour time frame. I have placed all the levels for you on 4-hour as well. So this is what we have. If the market actually right now, this is struggling with 200 moving average right there. So if the market actually is able to go beyond it, then we can look for this FCP zones to be this FCP zone to be reached. Okay. Otherwise, what I'm expecting dollar to do is do something like this, right? It can form that M pattern, and for that it will have to come down to 92.368, and if it breaches that, then we're looking for short move. For the bullish side, if the market starts to, if it actually gives us a confirmation beyond 92.64, then we are looking for a long position into this FCP zone, which is 92.86, or it can go into 92.90 near about in this area. Now, if the market actually continues to go higher, then the next level we are looking for is 93 or so, because that's a round number and we have got an FCP zone as well. And in that process, we will have this W pattern forming too. So trading plan is very, very simple. If you get a confirmation to go short because it's struggling right there at 200 moving average, then based on your R&R, go for a short position all the way down to near about this level. That will be kind of your maximum profit target, because this is the previous low here. And if you get a confirmation to go long from here, then you're looking for this high or even a little bit deeper into the zone and continue from there. So this is my analysis on DXY. Hope you enjoyed this analysis, found this useful. If you did, make sure you hit the like button and share it with other traders and trading communities. By the way, VATA Envisage is available for 1 day right now. After Monday, it won't be available. So if you want to subscribe to VATA Envisage, find a link below this video and go to the website and subscribe there. And I'll see you in the next one. Have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to wikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to wikinsa.com, and under training section you'll be able to see and submit this form.